Hi everybody, Brian Ullman again at Ford Financial Group. Coming to you through another video message here as we try and talk with as many people as possible about what's going on with markets, specifically as it relates to the coronavirus situation. And as many of you that we've talked to this week have correctly identified, it's not the coronavirus necessarily that's causing the markets to go down. And we're back, as I record this message, we're negative on the week. But really it's the worry that the fear is going to spread into the economy, where you're seeing conferences and meetings and travel plans cut short or eliminated altogether, and the worry about how that might spread out in the economy. And what we're seeing right now, and the reason why we have a lot of volatility here, is because traders, not investors so much, but traders are unsure about how this plays out, even though history shows that when we are going through a kind of a scare like this, we tend to have pretty quick recoveries. Nothing is guaranteed, of course, and so out of short-term fear, we have traders selling off quite a bit. We are still, as investors, not necessarily worried about what the future holds if we're looking further out, right, past this summer, into this year, next year, and so on. If anything, I would suggest that this presents an opportunity for younger investors. If you're contributing to your 401k, and when I say younger investors, I'm talking about people who haven't retired yet. If you haven't retired and you're still contributing to your 401k at work, or your 403b, or whatever kind of retirement plan you're contributing to, you are getting a much better deal on your investments than you were as recently as a couple of weeks ago. So keep contributing. This will pay off in the longer run when you are able to buy more with the same amount of money that you're contributing, and can help kind of spur things in the long run. For people who have a shorter time frame, you have a shorter time frame, so it's very likely that you have bonds as part of your investments. And so something that's going on right now is, though the stocks are down for the year, and even just looking right now as I record this, the Dow is about at break even on this week. So as volatile as it's been, we're still not really getting beaten up too badly on the stock side of things. But chances are you have about half of your portfolio, if not more than that, depending on your risk tolerance, in bonds. And bonds are doing well right now. You've heard already that the Federal Reserve is cutting interest rates by 0.5%. And we're seeing the 10-year Treasury hit historic lows. With falling interest rates, that tends to be good for bonds. And so if you are the type of investor that holds a lot of bonds in your portfolio, or even some bonds in your portfolio, it's helped to offset the effects of this volatility that we've had over the last few weeks because of the coronavirus and the worries about how the economy will react to the coronavirus. So if you're a conservative investor, chances are diversification is working really well for you. If you'd like to know about your specific situation, I would suggest you give our office a call and talk to your advisor to see how things are affecting you. But chances are, for your portfolio specifically, it's nowhere near kind of the bloodshed that you're seeing probably on the nightly news from the broader markets. If you're a younger investor, yes, you may be feeling the pain just as much as anybody right now, but it's important to know that you have years, if not decades, before you're going to retire. So keep making those 401k, IRA, 403b kinds of contributions. Buy as stocks are going down, because it pays off for you ultimately in the long run. And if you have decades to go before you retire, chances are you're going to go through a few more of these. It doesn't feel this way, but we did this in late 2018. And so we're going to do this a few more times. It's not to say, it's unclear right now. People ask if we're headed into a recession. I don't know the answer to that, of course. It's possible, certainly, that we head into some sort of brief contraction. It's almost certain, I would say, that growth is going to slow here for the first and second quarters of the year, but the numbers will bear that out. But either way, we are long-term investors here. We are not short-term traders. And so if your time horizon isn't quite as long and you're retired, chances are we have a diverse portfolio of bonds that are helping to protect you. And if you're a younger investor with years or decades to go, now is not the time to turn tail. Now is the time to keep making those contributions to your retirement accounts and take advantage of this discount that you're getting on what you were buying at a much more expensive price even just a few weeks ago. So as always, if you have any questions, you can comment below, and I'll be happy to get back to you, or you can call our office or email us at info@fordfg.com. And I look forward to talking to you next time, hopefully maybe with better results from the markets working for us. Have a great weekend.